What's up, guys? We'll see how many people come for the live stream. It's a holiday weekend, so I am anticipating a little bit lower attendance or participation, but sometimes I'm surprised. How's everybody doing? What's up, Raul? Hope everybody got a chance to see Top Gun now. Definitely was in a really awesome movie. Got ourselves a 3-day weekend. Don't forget, guys, no work tomorrow. And so apologies ahead of time if I say Monday during the live stream. If I say Monday, know that I mean Tuesday. Hopefully I can catch myself and not say it. You guys barbecuing? What's everybody doing this weekend? Give it just another minute and a half here. We'll see if anybody else pops in, and then we'll get this thing started. Well, you know what? I don't know if we're going to get any more people in, and there's no point in waiting a whole nother minute of dead air. Let's just get this started, guys. Thanks for joining me. It's Ricky here, True Trader Sunday Prep. This is, for the first, actually, what is Tuesday? Is it the 2nd? No, it's the 3rd. So the 3rd, this is for the 3rd through the end of the week. This is going to be, the first week of June, and so we got a new monthly candle coming, and I hope you guys have been killing it. So we're gonna get into the ideas and stuff after a little bit of I'm gonna go on a bit of a rant, but first, guys, if you guys don't already know, I talk about it a lot, but Cobra is by far my favorite broker. If you guys are looking for a broker that always has great locates, hands down the best customer service, and is extremely competitive in terms of every other criteria you could have metric on a broker, it's Cobra, guys. If you use the link in the description, you will get 25% off your commissions, and you're also going to get 1 free month of whatever platform you want to use, whether that's Dots or Sterling, or I believe they have their own as well. So yeah, check that out. If you don't have a great broker, you need one. I can't tell you how many times I literally wanted to scream or punch a wall because I wasn't happy with my broker. Cobra has never, ever let me down. These guys are amazing. Spike Heat, these guys created a product that allows me to not have to manually track data on all kinds of setups that I track. You can go back 20 plus years in historical market data, cast a wide net, get a large sample size, and immediately have yourself the ability to drill down into the data to see if there's an edge in your system or your strategy. There's a link in the description for them as well if you guys want to check them out. Scripts to Trade, these guys make indicators for TradingView and Thinkorswim. If you haven't heard of scripts to trade, you guys are living under a rock. They create all kinds of custom made indicators. So if there's not one that they've already made that fits whatever it is you're looking for, hit them up. They will create stuff for you custom, and they're traders as well, so they understand what it is we need. Like it drives me nuts when I work with companies that can produce a product for me, but they're not in the same culture or world or career arena as me, and so it's like speaking a foreign language to them. Scripts to Trade, check them out. You won't be upset. They even have a free indicator, which I personally use, which is the VWAP Boulevard. So even if you don't want to spend any money, go check them out and at least snap up that free one. All right, guys. Here's your earnings for the week. Obviously, nothing on Monday, you can see clearly, but there are some big names, so we should have at least some good trades, regardless of what happens, regardless of if volatility kind of like gets squelched a little bit, or if we do stay extremely volatile. There's going to be a lot of things popping this week. So that's it. That's all the housekeeping. So let's get into the topic. The title, I guess, is a little funny, but it might be misleading. You might be wondering what the hell it's saying. It says, do your effing job. So last week, I'm just going to be very transparent with you guys. Last week, the Sunday prep probably could not have been more on point in terms of, making sure I knew I wanted to be bullish going into the week, looking for ideas that fit that narrative, so that like if the market behaved in that manner, there were going to be go-to plays. Like I had my list ready, and those names, there were some trades this last week that were absolutely phenomenal. Now, in terms of execution, I was green last week, but you wouldn't, I couldn't even explain to you how upset I was with myself. And so some of you guys aren't in True Trader, right? So you may not understand this. Like I'm in a room where I moderate and I also call out trades, but I'm human. And so obviously people could sense my irritation because of some of the trades I missed, such as like Nvidia, the long off the earnings was A+ as it gets, and there was a perfect setup, and I just couldn't hit the button. I wanted cheaper prices, or for whatever reason, I just couldn't take the trade and had to sit and watch it go. Same with coin on, I believe it was on Friday, but there was a trade on his Thursday as well, and that was like extremely articulated on how I wanted to trade that last Sunday. I was dialed in and focused on it, and something came up where before I knew it had already gone without me, and I think maybe focused on something else that just happened to be moving at the same time. And a lot of people will try to comfort you and have your back, and a lot of people were like, Ricky, it's okay, man, you're human, blah blah blah. And sometimes I feel like people can't understand the frustration, but I want to be very clear with you guys. When we talk about trying to keep your emotions at bay and stay on an even keel and remain objective and rational, there are a lot of things in trading that will get you emotional that shouldn't. Such as, Benito pointed out, he's like, a good example would be losing money on a trade, but it was a good idea, it just didn't work. You shouldn't let that make you emotional. You shouldn't get upset about that. But there are times when I want to be crystal clear when I say this. We do not get paid by the hour. I don't get paid to sit here for any amount of time. Nothing is guaranteed. I get paid to capitalize on opportunities. And there are times when you have a perfect game plan and they throw us underhanded lob pitch right over the plate, and to not swing at that ball is 100% completely unacceptable. And I have every right to get extremely upset with myself to not have pulled the trigger or to not be part of that trade, because you cannot afford to miss those big opportunities. And you have to look at what we do in terms of, consider the perfect analogy, even though we do not do something physical, is a high level athlete, professional sports player. Whatever sport you like, right? Like say you like baseball, let's just use baseball. Bases loaded, bottom of the ninth, that scenario, right? Games, maybe your team's down by 3 runs, bases loaded, and he throws a softball over the middle of the plate. If you're that guy that's paid the big bucks because you're that star player, your team is counting on you to knock that one out the park and win the game for them. It is not acceptable to not take the swing. And you have to understand that, we are performance based. We're rewarded by our performance, right? So when you have an opportunity to capitalize on, you don't perform. If you don't get somewhat upset, what that tells me is that you are not taking what we do for a living serious enough. I take what I do for a living extremely serious. So when I don't perform like I knew I should have, I am going to be frustrated with myself. Now, the one thing I will make sure is very explicit here is that I do not allow that mind state to get me into trouble trading. When I realize I missed those opportunities and I'm upset, I'm not trading anymore that day. The system's shut down. I already know no good can come of me hitting more buttons. Plus, when you're upset because you didn't swing at an opportunity, guess what? The opportunity's gone. It does not come back. You have to focus on the future and the next big trade. But what you really need to do is channel that anger and frustration and make sure what you do is you do not allow that same scenario to unfold again. The next time I have that plan, the plan's all there, and they throw that soft pitch right over the plate, I will be hitting that out the park. And it's a non-negotiable. And so, I guess that's what we meant by the title, like, do your effing job. That's exactly how I felt last week when I was sitting there and a big trade was kind of just going without me, and I just had to be like, what in the world's going on, Ricky? Like, you have to do your damn job. When it matters, you better show up. And so I want you guys to take that as the lesson today. I'm human. I do make mistakes. It's a good thing it's a 3-day weekend because it gives me time to kind of recenter, refocus, and be ready for this coming week because there will be big trades and stuff, and I'm going to make sure I capitalize. And sometimes, it takes a week like last week to remind you, hey, dude, as much as we joke and have fun, like, this is serious business. I'm not here to play games. I'm here to make money, and that is the bottom line, guys. All right, that's it. Let's get into the prep. Guys, neither I, True Trader, or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Make sure you understand nothing I talk about today is a solicitation to buy or sell any stocks. It's simply my opinion, and it's meant for entertainment purposes only. All right, guys. So, like I said, we get a new monthly candle on Tuesday. See, I caught myself. I didn't say Monday. June starts. We are heading into June on Tuesday, and this candle, so the reason I'm using the monthly chart is the very first thing I want to show you guys is I have an alert set up here just over last month's highs. Why? Because I want to know if we break last month's highs. Why? Well, in order to make a lower high, we need to, right? Look what happened back here, right? We broke February's highs in March, and that was what created the lower high on the monthly chart. So again, we do have another scenario here where if we can get above May's highs, we may be putting in the next monthly lower high candle. We may not, right? We may never break above May's highs during June. Maybe we get an inside monthly candle or whatever, but you guys need to learn how to set these alerts because you need to know when these trigger and you need to know what they mean, right? We need to know why I put that alert there. All right, so let's drill in a little bit. Here's the weekly chart. This was the candle. We talked about this last Sunday. Look at all the red weekly candles. It was bound. Like I said it last week, if we had got another red candle, I would have come into this week insanely bullish. But we got the big green candle. We had the rally. And I want to point out that we've had one before. And what do? They run right into the underside of the weekly 20, and that's where we start to roll over. So I do want to keep my eye on the weekly 20 as well as the weekly 50 we have up there. And we have some levels of resistance that I've got marked out. I'll drill into an intraday chart to show you where those levels came from. But I do wanted to spend a little time on the weekly chart to just show you how you know, even though we get a big rally, the bigger picture is still a downtrend, right? Until we start to make higher lows and then higher highs on the weekly time frame, this is just a bear market rally, a big spike back into resistance, and I do expect to find some really good short setups if we push higher. I don't expect them just yet. Let's get into the daily. All right. So here's your daily chart, and this is what, you know, over at True Trader we were talking about all last week in the room, right? We finally have the higher low, and then when we broke this May 23rd's highs, that was the trigger to get us back to the 20-day. You know, a downtrend cannot reverse to the upside unless it stops making lower highs and lower lows. So what do we get? We finally get a low, a push up, a higher low, and then the break. And that was what sent us. We've had it before, back here. Look at low, push up, higher low, and go. Into the 20-day, finds resistance. Into the weekly 20, finds resistance. Push up, pull back, lower high, lower low, and we get back into a downtrend. So again, this, as long as you understand how to read what the author's writing, we can sit here all day long and remain objective. But I am still looking as this has some more upside, and I do want to be ready to buy pullbacks, to buy weakness if they start to hold, and we start to continue back up towards the weekly 20. So let's look real quick for the levels I have set. This is a 120-minute chart. Just helps, you know, keep us from looking at too low of a time frame, but at the same time get into the intraday and see where some of the big pivots happened. And so the first level of resistance I have is going to be up here just under the 50-day. The red line on this intraday chart is actually the 50-day, just transposed onto an intraday chart, guys. And you can see there has been plenty of price history up in that area. And again, I'm not setting that alert right there because that's where I want it. I want to be notified ahead of time before it goes into the 50-day, right? So the next level is going to be up here around 4,300, which you see has been resistance 3 major times. And trust me, if this continues to push really hard and pushes right into those levels, and it has not tested those levels since way back in early May, the very first test of those levels is going to be a pretty high conviction short level for me for individual names, because usually when we get a big push into a level that hasn't been tested in a while, that gets there emotionally, it's going to have to take a breather before finally getting through it. I'm not saying this will end up being the top, but if it can spike, go kind of parabolic into it, you know, just a big emotional move without any real resets, it's going to get me very, very excited for the short setups, okay? But remember, I want to stay bullish at least in the early part of the week. I want to be looking for these dips to hold. So the first level of support I've got marked is going to be right here. Let's call it 40.75. Currently going to be right around the 120-minute 20, but it's also pulling back towards the 20-day, which is also the next level I have marked, is the 20-day, guys. And then below that is a retest of the long trigger. I'll show that on the daily. So that's this level here was the long trigger, right? The pullback, push up, higher low, the break of May 23rd's highs. A retest of that level is a level I will very much be looking at as a bounce area. So that's why I have that alert there. And you'll see when we move over to the NASDAQ, same thing, right? And NASDAQ had the same setup last week, right? It did not trigger until later in the week, though. I believe the ES triggered sooner, right? ES was triggered on, let's see, the 25th, and the NASDAQ triggered on, the 26th. So it was a day ahead. But regardless, the rally still followed through. You still got the trigger. We still got back to the 20-day. Again, I'm still bullish near term. I still think we have room to run before we get into levels where I'm looking to short. Again, the monthly chart shows you I have the high of May marked so that I know if we're possibly getting a lower high on the monthly time frame. No different. The weekly chart, again, look what happened the last time we reversed. We went right up into the underside of the weekly 20. So if we can get up into those levels, that's definitely where I'm going to be looking. I'll throw an alert there right now, actually. I don't know why I didn't have that one marked. And this one, I'll just set this for 2 weeks. Okay. Let's get into the daily. Yeah, I mean, really very, very similar to the S&P. And what I actually, I'm not sure if I pointed it out last Sunday or not. I think I may have. But XLK, even though NASDAQ hadn't triggered yet this same setup, XLK had, right, which is the tech ETF. And we'll touch on that when we get into the sectors. But yeah, I'm still looking for pullbacks to hold. The 20 days, the first spot, and then a retest of the long trigger, just like we talked about on the ES. Both those levels will be where I look for bounce plays or longs that are setting up. Up here into, let's see, 12, let's just call it 12.9 is the first level I have marked for resistance. Right above that, you have that quarterly pivot and that 13,000 psychological round number. Above that, with a 50-day and the annual pivot right up there in that 13.5 area. And then above that, that 13, let's just call this a range, this 13.4 to 13.5, because those highs from April 28th and May 4th, pretty hard to ignore that was a key level. So the 50-day and the annual lining up there. There's just a lot of resistance in that area. And then above that, we have the weekly 20 this is the one I just set. You guys watched me do that. So that's the weekly 20, this yellow line. All right, let's move on to Bitcoin, cryptocurrency. This one, guys, really just looks like it's hanging on for dear life. It really, really does look like a bear flag here. I mean, you can see it getting tighter and tighter, starting to kind of slip off the cliff here, barely hanging on, lower highs, descending 20-day. But what I will point out, even though this looks like it's hanging on by a thread, it really looks a lot like this back here, right? So big move down, consolidation, looks like a bear flag, lower highs, holding on by a thread, and then lift off, right? So don't write it off. Don't think it's dead yet. Wait till it cracks and gives confirmation. But definitely looks like it's just barely hanging on by a thread. All right, so let's get into the sector analysis. Real quick, head over to barchart.com and we can go look at our stock market sector matrix short term. All right, guys, financials had a big bounce. We'll get into that one. Energy still strong. Energy and oil still leading really well. Consumer discretionary had a big bounce. IT, everything really had big rallies, right? That should come as no surprise. So the devil's going to be in the details when we look at the charts. But what we need to ask ourselves is, did the bounce these sectors have get extended? And is it extended in the levels where there's going to be a lot of supply, a lot of resistance? Or are these bounces still kind of in their beginning stages and we can look to buy dips? Or are they in uptrends and like the oil and the energy sector, and maybe we're looking to fade when things get extremely extended? So we'll take a look at these ETFs and we'll get into this real quick. Just go through the whole list one by one. Retail, this is one where the bounce has been pretty big. We're right up in the levels. I do think it could go further. I think retail was really beat down. We've had a lot of their bigger names come out and report recently. You had Dick's Sporting Goods, you had Hibbett, you had Nordstrom, Kohl's, everybody. So like American Eagle, Gap, most of the retailers have gotten their numbers out. And we've seen some of them have some pretty big bounces. They were kind of getting overdone, right? So I don't know if this is going to be extreme enough yet to fade, but if we come up into this, this descending trend line here, up in this 73.50 area, that is where I do think it's going to be getting a bit extended, and I would be looking to fade some of those names. If we pull back, I'm going to be looking for, a fib retrace level is going to put us right back towards this VWAP Boulevard, which you see right here. That's what this is, 61.85. Coming down into these levels, I think we're going to start to see some support show up and possibly put in some higher lows on the daily chart. We'll see. Financials, this one I think is getting a bit extended. I think this 36 to 36.30 area with the 50-day, the annual, and these recent highs, that's going to be a pretty big spot to try to get through. The problem I saw with the financial sector, in terms of individual names for ideas for the prep, was just, each individual name, one, needs to have liquidity and needs to have range. There's a few that I go to when I want to trade this sector. Capital One, Morgan Stanley, Goldman Sachs. Those are names, where they have the liquidity. Even things like Citigroup, right? The thing about Citigroup is the range is a bit shy, right? $1.85. So, I don't have any names in the list from the financial sector as fade ideas, but if some of them start to push, it's a sector I do think is getting a bit extended, and I do think there will be some good fades. I just, would like some of those charts to set up better. So it may be one of those things where it's not on the Sunday prep, but I do a prep every night, right? Monday, Tuesday, Wednesday, Thursday. So, maybe Wednesday or Thursday it starts to set up, and before you know it, it's going to be on my watch. You guys just only get to see the Sunday prep, right? Retail had a pretty big, real estate had a pretty big bounce after making the higher low, higher high, push, getting up in there. Again, I'm not really trading any of these individual names, so it's not a big deal for me. Healthcare held to the level we talked about, like a perfect. Really like the way it held. Pushed up into the 20-day, pull back, put in that higher low, and now we're going. Let me take a look at the weekly on this one real quick. Yeah, still would need to pull back and make a higher low on the weekly chart to really make me think that the higher time frames are ready to go. But I like this. I like the way this chart has held up even during the bear market, right? Like this is still a very intact chart. Okay. The material sector, again, I don't trade a lot of these names. This is kind of getting extended up here. I feel like we come up into the 90s. There may be some individual names that are extended as well and can be faded. Industrials extended still looks like trash. Still has a lot of resistance and overhead. Utilities are getting a bit extended up here. But again, this one held that retest of that breakout level really well. So when you start to zoom out, start looking at weekly charts and you start to see like this looks really, really good. Even though on a daily chart it might look extended, this doesn't seriously scream short at all when you zoom out. This screams like maybe look for strong names in the sector and buy dips if you're trying to find a place to put money to work on swing ideas, because right now a lot of people are still trying to catch falling knives. Meanwhile, there's sectors where they're performing really well and some of the individual names are performing really well, and you're over there trying to catch growth names, right? And you're just getting cut. Why not look for charts that look like this and start putting your money where at least it's a bit safer if you have to be long? Okay. This one is one that really interests me. You remember, this got smoked. This is the one we talked about last week that got smoked because of Walmart and Target. But all the other retail names that came out were reporting pretty good, having good reactions, and then as well as the fact that this sector tends to do really well in late market cycles, right? So like if we're going into a bear market, people still got to buy all their consumer staples. So this is a big move up right in the levels of resistance. I am going to be very, very interested to see, does this pull back and start to hold some of these levels? Because this was a pretty long trend line right here that it lost. But sometimes things just happen that move the market, things get overdone, and then they try to correct. So I want to see, does this correct and regain this trend and we can start back up? Or does this get stuffed up here and then we start making lower highs and start to roll back over? That's what I'll be watching here. I do think there's probably some individual names you can look to fade just from the sheer amount of this move, right? Like 69 up to 75, right into the 20-day, right into your monthly pivot, right into your quarterly pivot. That's going to be a tough spot to get through the first try. It may pull back, curl, get a little bit of a consolidation going, and then push and get through. But off this move right here, that's a tough one. Consumer discretionary still looks like trash, got a really big bounce. This is the kind of name where if this comes up a little higher, if we get up into this 162, 163, 164 area, I'm going to be looking to fade names in this sector for sure. Communications is another one that's been really weak, getting the bounce, but this bounce isn't extremely overdone yet. The 50-day and this monthly pivot 63 has my interest in fading the communications sector. Biotech's finally starting to see some curl, right? So you get the push into the 20-day, the pullback, possibly a higher low setting up here. You can see it really nice on the weekly chart, right? So look at this, looks really nice here. Pullback, push up, higher low, break above this. We got room back to the weekly 20. That would be the target if this triggers. Remember, there not a lot of sectors are this overdone on the sell-off. This is, and it's really holding some levels here that, you know, you can see the big sell-off back in the COVID March 2020 sell-off. We just held those levels perfectly. So do we bounce from here? The volume is coming in. The volume keeps growing. It's definitely on watch, okay? Tech, like I told you last week, it already had that setup. It triggered on the 25th, the same day as the S&P. The NASDAQ, remember, was the day after. But this was the giveaway that the NASDAQ was going to go and trigger. If you had seen this ETF, and you know that NASDAQ is heavily tech weighted, and then you have the tech sector showing you, yeah, we're already triggering the day before. It was kind of almost a foregone conclusion. Energy and oil are starting to look a bit extended up here, and they're into some pretty big levels. You want to see where this level comes from? Let's zoom out. It's the last big push before the only level after this level higher is going to be your all-time highs, right up here. And you know what? I mean, might as well. Let's go ahead and draw this line. So yeah, this is that last really big resistance level before we get a shot up here at those highs. And again, I don't know. I have no reason to think that this really beautiful bullish chart comes to an end. I don't think that's what I'm trying to say here. What I'm trying to say is it's made a big move into this level. So it would not surprise me one bit to have this come back and reset and you know, get ready for that next leg up. But I think the first push up into these levels is going to provide quite a bit of resistance. And you see the same thing on the oil chart up here. Oil, the level I'm looking for is up here in the 180. So it may not get there, but I really wish it would. That would be the level where the oil names become probably my big focus on the fade. If it can get up to those 179, 180 levels, emotionally, I'm going to be extremely focused on that. And you can see where that level came from as well. Yeah, that's just an extremely black and white objective rational area where if we rip up there, yeah, I'll be fading oil names. And again, when I say things like that, I really hope people listening understand by now that doesn't mean I put the trade on and like throw risk management out the window. I'm still fine with being wrong, taking a loss, and just moving on, because those are those high probability trades where you got to take the shot. It doesn't mean that it's going to work, but if you don't swing the bat, you won't hit the ball. Okay? So that's your sector analysis, guys. Let's get into the individual ideas. Let me get off this weekly chart. So for the long ideas, strong stocks looking for continuation. MOS. This typically does move with oil because it's a petrochemical company, right? I believe these guys make fertilizer, some sort of pesticide or petro-based chemicals. It's really setting up nice here. This chart doesn't really show you near what I thought what it looks like on the weekly, right? So yes, we tested a key level up here, rejected, pulled back, but look where we're at now. Look how well this has been trending on the weekly 20, and now we're back to it. And not only are we back to it, but we've held it, you know, for 3 weeks. And last week was an inside week. Let's see, what was the idea I have written down? Over 60.5, and I'm looking to buy dips and join trend. Let's look in the daily for the trigger. Yeah, 60 and a half is from May 25th's highs. So we need to clear that, and then we'll have put in this higher low, and we're kind of breaking above, and that should get us the push. Yes, the 20 days right there, but I feel like, you know, when you zoom out and see the weekly chart look the way it did, I want to be in as soon as possible so that I can have more size with the same amount of risk. If I wait until over last week's highs, which were, let's see, last week's highs were 61.78. If I wait, that's another point later. So, you know, The difference between being able to risk $1 and risking $2 is your size has to be cut in half. And that's the difference between a huge trade and just a so-so trade, right? So over 60.5, and I'm looking to start buying dips and join trend on MOS. The next idea I have is ABBV, and I want to put this on the daily chart before I change it, and I'll show you. So this chart probably doesn't look like much from the daily, right? Nobody probably sees this and goes, oh my God, what a beautiful chart. When you see the weekly chart, I hope you guys see what I see. So let's do it. Jesus. Now this is a beautiful pullback to the weekly 20. Push up, higher low starting to form. We don't know if it's a higher low yet. Why not? Because we don't know it's a higher low until it confirms by breaking over 156.89. Okay, so I wrote down, let's look at the daily again, see the levels here. I will play this. I will buy a dip on the open Tuesday. If it opens weak, I will play it against Friday's lows, right? You got the annual pivot right there, 147.55, and the low a day on Friday was 147.75. So any kind of flush down there, I'm going to look for buyers to step in, some higher lows, something to risk against, and I'll get long. And if it starts to work, this 100% will have a piece of the position left on after I lock in profits for a swing trade. Because if this starts to clear levels, if this gets over, you see I have this level marked as an anticipation trigger, right? Anticipation of what? Anticipation of the break of this level up here. So again, we want to be in as early as can, but we still want to stay relatively small until we start to see confirmation on these bigger ideas, the bigger picture trades. So again, a flush off the open on Tuesday, I'll get long for a day trade, but I'll have at least some of it left for a possible swing in case this starts to trigger and go. Because the bigger picture, the weekly chart here, we trigger this over 156.89. The target, the defined target for myself is these highs. Okay, so we can put, let's see if this is the right one. You can throw this on here and you can start to like visualize the risk reward and how it's going to make sense. So you see, if we wait for the confirmation, if you buy it right when it triggers, you're getting 1-to-1. That's not really what you guys should be aiming for. We really want to get asymmetric trades. So if we can get in down here on last week's lows, let's just call it Friday's lows, and we're risking, below the lows, and it closes strong and you have a position on, now you're getting a trade that's extremely asymmetric, extremely. And don't forget, like as this starts to confirm, like when we break this level, I might add some more. And when we break this level, I might add some more. But because we started down here, our average is going to be somewhere maybe in here or in here. And now we're starting to get big size because it's the author of the story is telling you, hey, you're right. So far, it's playing out the way you expected. So you're able to put real size to work once that happens and still have, look, that's 3-to-1 right there. And I think that's a pretty fair area to assume that would be about where your cost basis is if you start the 147s and then start to add as we confirm. So just keep that in mind. That's the way, I personally look to try to build into these ideas, anticipating early but with small size, and the ability to get a day trade out of it with big size, because this is just as valid as a day trade idea in its own right as any of the day trades I'm going to put out there, right? I mean, it's got liquidity, it's got range, and it's got a key level that we already showed Friday held. And you can see they've been buyers down here off this level. So again, that's just the way I personally look to back into those swing ideas by expressing it initially as a day trade where I can leave a piece on if it starts to work. Well, that was long-winded, eh? All right, the next idea and the last idea from this section is NTR. And again, this is another petrochemical one. So typically moves with oil. So again, if oil and energy continue higher in the levels where I am looking to fade, maybe these start to go, right? So again, this one, just like ABBV, I'm looking to scoop against Friday's lows. A flush down to 93.30 gets me interested. See if they the buyers step in and can get real nice risk reward on a trade where, you know, if we buy that flush, let's go to an intraday chart. Let's say we open 90. Let's just say we open right around where we close. Okay, you know, you get this 2.5 point flush right off the open, right down into these key levels, and you're able to get a trade on with, you know, probably about 50 cents of risk to make quite a bit of money, right? These are asymmetric trades. So I really like a flush down here into that quarterly pivot on NTR for Tuesday morning. All right, so usually the next section is oversold reversion setups. That means the stock has just gotten really oversold to the downside, and I'm looking for a bounce play. I don't know why I did that. I meant down. So sells off really hard. I'm looking to buy this for a bounce. There's nothing out there right now. Like there's literally nothing at all that hit my screener, and I'm not gonna, you know, force myself to look for something that's subpar. I only want the A+ stuff, guys. But I do have a lot of trades that fit that same criteria that we talked about last week when we went over the coin idea, or we went over mRNA. And mRNA, you know, is right there at that trigger. You guys can see, I don't like mRNA that much as a swing, because even though it's triggering to the upside, it's going right into the weekly 20. So there's not a lot of meat on that bone. Doesn't mean you can't dip. Like, I will probably be looking to scoop dips on mRNA all week long on emotional flushes. But that's not, you know, that's not what I was really trying to point out about it. But there's still a lot of ideas that have that same look that they had last week, and now the market's turning. So I'm going to throw these in, and like, I don't really know what to title them. I labeled them as possible swings, right? But really, they are kind of day trades that maybe turn into swings as well. But what it really is identifying that these have just set up for really nice long setups. And so the one key thing is, I don't want to step in front of them short. If they start to rip, I need to be like focused on the fact that, no, these are really well set up longs. I should be looking to scoop dips and join the trend instead of trying to get ran over by a freight train, right? So that's what these about. Or let's see, how many are there? 1, 2, 3, 4. There's 6 of them. Okay, so I'm going to give you 6 of these ideas. They're probably going to look very similar, right? So pay attention to what they look like, and you can start to find these yourself as well. So the first one is Lucid. Lucid is not triggered yet. It needs to clear 1993, just over 20 basically. What I wrote down was over 20, and I'm going to look to join trend. Whether it's the same day it triggers, or maybe we trigger and then the next day you get some kind of early flush off the open, buying it into previous support, previous resistance turn support. The weekly chart shows you everything you need to see here. Here's your low, the push up, the higher low. So over this, and you get your trigger, and you got a lot of room back up to your weekly 20. And again, not, you know, there's other names in this same sector, right? Look at Rivian. What is Rivian missing that Lucid has? It's missing that higher low on the weekly chart. Rivian has not had the shorts come in, or the bulls try to bail out of the long position yet, which would give you the candle that tries to probe lower. That's what Rivian's missing. Rivian has not tried to probe lower the same way Lucid did. You can see it, right? When Lucid made this push down here last week, they probed below the previous week's lows. That's what, you know, that's the missing piece from the Rivian trade. That's why Rivian's not on the plan, and Lucid is. All right, so Lucid over 20, I want to join trend. I want to look to join trend, buy dips if higher lows present themselves. Square is the next one. Again, exact same setup. Low, push up, higher low, and we're triggering. I believe we triggered on Friday already, so it's already valid. So now I'm just looking for scoops on weakness. So let's take a look at some of the intraday areas so we can try to identify where we'd be getting long this. Gonna kind of depend where we open, right? Like, we don't know if we're gonna gap up, gap down Tuesday morning. But if we were to open flat, I would probably be looking, let's see. Yeah, probably off these 82s. I really liked 82 all last week, was kind of eyeballing it. So probably look for a flush back down towards 82. I know people are like, yo, that's 8 points away. It's square. This thing moves, okay? Whoops. Let's look at the daily chart. You can see the range. $8.92 is the ATR. So that's perfectly puts us right down into that 82 level. If it were to gap up and start going, it depends how far we get away from these highs, but I may look to buy an emotional flush right into the quarterly pivot at 90.5 as well. But that's square. And again, you guys have to start to recognize these setups. The lows gets oversold, pushes up into the 20-day, higher low, and then a higher high, and you can see it on the weekly chart, okay? And you have room back to the weekly 20. So again, like these are the types of trades where, yeah, if you get a nice day trade out of it, that's great, but don't forget that this has potential to get back to the weekly 20, which is way up at 110. Now, obviously, it might take a few weeks to get there, so again, that may come down lower, but there's no reason this can't test 100. So if you're buying this off an 82 scoop and you lock in 3, 4, 5 points on the day trade, don't forget to possibly leave a piece on for the swing idea, right? I mean, oftentimes you'd be surprised that the little piece that you leave on for the swing idea can make you almost as much money as the large position you took off on the day trade. All right, so next idea, NVAX. Again, look, NVAX, same setup, higher low. So we break over 60.9, let's just call it 61. And again, I'll be, actually what I wrote down is over 60.6, and I'm looking to get long on dips. Again, what is the difference between NVAX and Moderna? Moderna doesn't have as much meat on the bone, right? The weekly 20's right there on Moderna. NVAX has some room, right? So I want to make sure you guys understand stock selection is huge, right? Stock selection is huge. All right, next one, SE. Hopefully you guys are going to be like, damn, yeah, all these are starting to look the same. Now, this one may look confusing. You're like, oh, but it doesn't have that higher low on the weekly chart. The reason it doesn't is because this stupid little candle right here, this was actually a Monday, and then the next day it gapped up, right? But what it did do was it did try to go lower. You see this candle on May 24th? The break of this low here from May 19th, that was them trying to go lower, and they couldn't. That's a failed breakdown right there, and now we're triggering the long. So this one, again, is another one just like Square, where it's valid already. It triggered on Friday. Now I'm looking to buy scoops. So 77.7 is what I wrote down. And I know you guys are like, well, there's a weekly or an annual pivot at 78.92. Ricky, why don't you want that? Because I want 77.70. Let's see why. Let's see if I can find it on... why? Because it's a retest of the long trigger. Here was the failed breakdown right here, this area, and it was this pushback higher that reversed it. That's what made it a failed breakdown. So I want a retest of that. It's literally this line right here. I want a retest of this line. Yes, there is last week has a pivot right below it as well. Again, pivots are just lines. They're math formulas. They are areas. It's not a written in stone. I want that exact level. You guys got to start using the daily charts and the intraday levels to figure out, even though there's a pivot there, where's the real spot that I want? I want that 77.70, okay? All right, next one on this list is ASAN. This one has not triggered yet. Can see it on the weekly chart, trying to put in a higher low here, needs to clear 25. So over 25, and I'm looking to join trend on dips. Plenty of room back to the weekly 20 on ASAN. Last name on this list is PDD, guys. And again, this one has not triggered yet. Actually, this is setting up for a much higher time frame trigger. Same idea, but look at what time frame we're looking at here. Monthly chart. You see, you guys need to really start looking for these things because they're such good opportunities. And it's literally the ability to say, look, if this stock is going to put in a bottom and it's going to reverse, then it needs to stop making lower highs and lower lows. So finally, we are looking like we may put in a higher low here, and then the break of, what is it? Just call it over 50. We break over 50, and this may have put in a very, and look at where it did it, right? This is the all-time chart right here. This is the IPO, or when they listed on the NASDAQ through their ADR, right? It's a Chinese company. But literally retested those all-time lows, right? The beginning of when it started trading. So makes sense for us to get a bottom right there. Doesn't mean it will, but it's objectively rational. It's being smart about where we take our shots, when the probabilities are in our favor, and when the price, the author, is telling you, hey, look. So you guys got to start reading what the author's writing, and you can't do that if you can't spot these setups. So over 50, I'm looking to join trend and buy dips on, this has the defined target on this would be the monthly 20. Now there's no way on you have to be very long-term swing mentality focused to try to get that kind of target, right? So I'm not gonna be buying a Chinese company for a very long swing idea, because it's a Chinese company. There's way so much uncertainty. We're in a bear market. Like the list goes on and on and on. But when this setup presents itself, I'm 100% going to make sure, one, I'm not trying to fade that move. I'm not stepping in front of a freight train. And two, I am trying to get long on this for day trades, right? And as long as this reversal confirms, we could have multiple trades on this over the next few months, right? Just every chance you get, as long as the trend is up, we're just buying scoops back into levels of support for bounce plays. All right, so that's it. So now we're going to talk about short setups. The first ones we look at are weak stocks looking for continuation, just like strong stocks looking for continuation on the long side, right? The first name on my list is BYD. I'm not a huge fan of the volume on it. It barely trades enough, but usually the opening 30 minutes are good. Good enough, right? Liquid enough to throw trades on and get range and moves into levels. So you guys by now should know how I feel about this company. During the COVID pandemic, when you couldn't find ground beef or chicken or anything in the stores at the grocery markets, there was a whole area of fake meat. I'm not talking bad just about Beyond Meat. There was all kinds of fake meat, and nobody wanted to eat it. Nobody, even when you couldn't find real food, nobody was buying that stuff. So that tells me everything I need to know about the company, and the chart kind of confirms it, right? So I'm looking for 3140, right? Spike up into that quarterly, monthly area, and it was also recent highs. They recently had the silly headline about Kim K being their, I can't remember what it was, their taste director or something stupid, right? But I'm hoping it gives it that little oomph, that push up into those levels where I can fade it, because I love fading Beyond Meat, okay? The next idea on this list is LYV, and if I didn't like the volume on Beyond Meat, I really don't like it on LYV. But the chart, the level I like, you guys can see all these. I don't know if it's probably not the best way to draw this. Hold on. This is silly. I don't know why I drew it like that. Let's just delete this one. We'll just use the line tool. You guys see this clear level here, right? I'm looking for any kind of spike up into that. And what is that level, guys? It should make a lot of sense. It's the psychological round number 100. Big spike up into 100 after making this really big move from down here, right? We've already gone 15% in the last 3 days. I think, a 20% move off the lows without a pullback is warranted a fade into that level on the first push. So I'm looking for 100 on Live Nation. And the last idea on this list, since somebody gave me shit last week, why don't you have Tesla on your Sunday prep? My answer was because Tesla's not in an area where there's any sort of edge. I needed an edge. Well, guess what? Tesla's setting up now, baby. Tesla's in here now. I am looking for this 7-8. So you see the quarterly pivot, and the underside of the monthly 20 is between 782 and 792. I'm kind of splitting the difference here using this recent high, but where it was that pivot it turned from, right? You guys see this level right there, okay? That's what I'm looking for. We've just been straight up since the lows. I know we had a big rally in the market, but Tesla is coming right into some really key levels. It's going to be a 27% move off those lows. I'm hoping it gets there. Tuesday, right off the open, just rips. I want that big emotional spike into those levels, so I feel like I have that real big edge and the asymmetric trade. Okay, so that's Tesla. 786 is what I wrote down. All right, overbought reversion setups. There's only two I got on here. SLB. This one's kind of getting into these levels where this actually was a swing trade idea from a while back, and that's why I have all this, this big cup drawn. I totally whiffed. This is another swing ideas. I can find a million of them, but if the market is not conducive to swing, sometimes you just don't go for them. Even though this is an oil stock, right? So oil and energy have led the way in this bear market. They're like one of the only sectors performing well, and for whatever reason I didn't get long when I should have. But we are pushing right up into this really key resistance level, and it's also got that psychological 50 area right there looming. So I'm not going to jump in front of it. I'm not trying to find the top, but I am interested in fading this as soon as I see it start to exhaust. So whether that's 48, 49, or 50, I'm there. All right. And then last one is Oxy. This one needs to get para up into 75. You see the annual pivot, but it's not just the pivot that matters, guys. It's what else was there. Key resistance level. Okay, so we draw these key resistance levels. We wait for stocks to make extended moves into them, and then we fade them, because stocks don't just go straight up, right? And yes, I know this one's got Big Daddy Warren buying it all the time and whatever. Look, it doesn't matter if Warren Buffett is buying this stock. It still has to move via a trend, and trends have to have pullbacks. So that's all there is to it. An exhaustion move into 75, and I'm very interested in fading Oxy. All right, let's see if there's any questions, and then I'll let you guys get back to your holiday. Raul is so kind as to compile them, so I don't have to try to read everything. What do I think about? So Douglas PC says, what do you think of biotech? LABU looks so beat down. I'm hoping for it to have the strongest recovery pop, plus seems to link to several of world issues. So that's an ETF, right? LABU, and so it's also a levered one. Personally, when it comes to bios, I've been saying it for a few weeks now, is there's a lot of them, they're so beaten down, they're literally trading below their cash value, meaning they have more cash on their balance sheet than their market cap, right? And so you can go and really easily start to make a shopping list of names that are just super beaten down. And if is it XBI? Yeah, XBI starts to confirm this bottom down here, and you can use things like LABU in conjunction with XBI, right? There's, as long as you understand how these things move and how the market mechanics of an ETF work. But I personally, I'm not going to express this trade via the ETF, especially the levered one. I personally would find individual names that I'm willing to put some money into. And the cool thing about biotechs is when the biotech sector wakes up, they have crazy moves, right? So you can almost personally, again, I hate to say this because I don't want to make it so, this isn't financial advice. This is my own opinion. I personally treat biotechs more like options than I do like equities, because I don't put a huge position on to where I have to worry if it starts to go down 10, 15, 20%. I have to be at peace with, it's a small enough position that, maybe it goes down 70% on me, and I look at it and I go, that one didn't work. But the ones that work, you're getting these crazy headlines come out, like you get a PR and you wake up one morning and it's gapping 150%, right? That's the bio world. So there's a lot of stuff that's cheap out there. I personally won't trade it through the ETFs. I just follow the ETFs to see where sectors may be turning. Hopefully that makes sense. Mega card rips. Do you do crypto? No, I do not trade crypto. I follow crypto, like Bitcoin and all the other stuff, because I trade equities that follow them, right? Like Coin and Riot and Mara and BTBT, and the list goes on and on. But it's been so dead lately. Some of those names are just complete trash, right? These names are probably never, unless, I guess I should never say never, right? Especially with crypto. But these are some of those names that this was all hype, And the air has really come out of that, and I don't think those are ever going to go back to their highs. I guess I could be wrong. I guess crypto could go nuts, but I don't see it happening. Swift Mischief, I think he's agreeing with the lucid idea. He says, believe it or not, Nikola chart is also good. I personally, that's easy to believe. Like Nikola, as much as people hate it, here's the funny thing, guys. When stocks get really, really hated, sometimes they make amazing longs because people get super stubborn, right? But yeah, I mean, it still does. The one thing Nikola doesn't have is it doesn't have the same setup that, kind of identifying on that lucid chart. Remember, I need to have this setup. It needs to have that higher low on the weekly chart for me. Because that's you guys, if you don't understand why, that's something I talk about a lot in True Trader. So if you guys want to learn that stuff, come over, join. Like, the prices are dirt cheap to come into the community and learn these kinds of things. And this is the kind of stuff, when you learn how to read what the author's writing, there isn't a price you can even put on that. Like, that's the most invaluable lesson that was ever taught to me, and I'm thankful every day that I had the mentor I had that taught me that. But yeah, like, I don't have time to sit around on a Sunday and teach everybody that every little nuance about that. But trust me, we talk about it nonstop in True Trader, and we have webinars on it and all kinds of stuff. So, but if you don't understand why that's so important to have that piece, I highly recommend trying to figure that out. Let's see here. Calvin Williams, SIGA is supposed to have a press release for EU contract agreement this week. How would you manage risk on something like that? I'm assuming big move, but not sure how to protect best. Well, it depends if you're long or short. Shorts are really getting kind of ripped on this one. Again, I was actually hoping, I tweeted last week, I was like, dude, I really want 1660s, like a parabolic move into 1660s to fade. And again, like, I don't trade the small caps near as much as I used to. I personally wait for 4 to 5 opportunities per year are the ones that they're all you need. I don't need to trade every stupid small cap that gaps up 40% pre-market, because I have the ability to generate income stream from large caps with way less headaches. The small caps are amazing when you get those setups that you only need 3 or 4 of them a year, right? Like the really big ones. So SIGA could, right? SIGA goes 20, 25, 30, 35, 40. I don't know. Like, who knows where the top's at? Then it gets my attention. I kind of was getting ready to trade it on Friday, had this parabolic move here, gone to 1660. If you're looking at it from the long side, it's kind of hard to protect yourself, because if that algo gets pulled and that bid is gone, you really just need to have a stop loss in mind and stick to it, right? Because these are the kinds of things, if you're long, I don't know where you're long from or if you're long or whatever, but if you're long, if it breaks through your level where you're supposed to stop out at and you don't honor your stop, this is the kind where you can get in big trouble, right? You get in a situation where you add, trying to bail yourself out because you just didn't want to stop out when you were supposed to. That goes for the short side too, right? Like, don't think I'm saying this just about longs. You really always should have. You should know where you're stopping out on every trade. That doesn't matter, short or long. But this kind of trade here, this starts to roll over and then the bid disappears. You don't know where it's going to find a bottom, right? Okay. KH, I'm sorry, man. I know, and dude, I've been telling you since you were down, I've been trying to help you since you still had 6 figures in your account, and like, I just, my heart goes out for you, but like at the same time, man, like, you can't keep doing the same thing and expect a different result. Like, if you keep doing the same shit's gonna happen. And I mean, we've talked about your trades and your positions. And a lot of what you have, right, is just hoping and praying that they come back because you didn't stop out. That's exactly what I was just talking about. You have to stop out when you're wrong. You can't just let it keep going, because what have we seen, right? People that learned how to trade 2020, 2021 were taught all you got to do is buy the dip, and eventually you'll be right. Well, that market's gone, guys, and people that were trying to do that got absolutely buried. And so, as much as my heart goes out to you, KH, you're not the only one, man. Like, a lot of people have had that happen, but you got to learn that painful lesson, because you can't do that. That's not the way trading works. You don't just get to hold on to something and pray. Swift Mischief says, when AMC 5 puts. I'm telling you, soon. This move has my attention. The higher the better. This thing did trigger. Let's look at the weekly and see. You got the same setup, right? So I'm hoping for the weekly 20 on this one, because that's the defined target. You get the high, or you get the low, the push up, the higher low, and then the break. It should get back to the weekly 20. So 1650. I'll be looking to fade this on Tuesday, on a parabolic. Like, if it can rip. Obviously, everybody. This thing ran up on Friday because of Top Gun premiering this weekend, right? So it's really funny to me. Reza says DKS. I don't know if that's a question. I don't know what. Maybe you're just spamming because you wanted to type dicks. But are you asking me if I like the idea for what? A long, a short? You just want me to look at the chart and tell you what I see? Hi, Stone, Rhea, and Kevin. Thanks. KH, I look at those charts every week for you. Every Sunday prep, we go and look at those charts, and they all look the same. They're all trashed. They're all, like, hopefully Baba's putting in a bottom, right? It's setting a base. But, like, you've been asking about Baba since, like, 200. So what's your average? What's your average cost on Baba? Because even if I think this is reversing from down here, like, where's it going to go? 135, 136? Like, pins, just trash. Like, this is... We've looked at these charts so many times, KH. Every time I look at these charts, they're the same thing. They pop, they make a lower high, and then they go lower. Every one of these charts, right? Look at what else? PLTR. Look, pop, make a high, make a lower high, go lower. These charts are in downtrends. There's nothing to see here. I mean, I wouldn't be long any of these names. Like the Chinese name I gave you is PDD because the setup is there. To me, it's about setups. It's not about an individual name. I don't get married to stocks. I don't care. And seeing like, dude, like PLTR is trading at $7. Why do you have a $21 average on a stock that's trading at $7? The only answer to that that's possible is that you didn't stop out when you were wrong. I mean, that's the thing. If you do not learn to stop out, and this is not just to KH, everybody. This is to everybody listening to this. If you do not learn to stop out when your trade is wrong, this is the kind of thing that you can get yourself into. You just look back at it and go, what in the hell happened? So this isn't a personal attack or anything. I'm literally saying this to everybody listening. Risk management is first, second, and third thought in my head every time I put a trade on. I am never putting a trade on without a stop in mind and knowing where I'm wrong. I cannot be more adamant about that with you guys. Let's see if we get some more questions in here. Yeah, KH, man, like, even when you went from so I don't want to spend too much time on this, but for anybody that doesn't know, KH has been coming into these Sunday preps for months and months and months. Actually came into Instagram Live I did, so we kind of have developed a bit of a relationship and a bit of a back and forth. But he went from having a $700,000 account to now it's down to less than 10K or something. But we've been talking since you still had 6 figures in the account, but you were still worried, right? You'd gone from 700 to 130 or something, and then it got chopped and you were down to 70, down to 60, and it was you always kept telling yourself dude, there's no way it can get any worse. I'm already at rock bottom. But dude, $10,000 is still a lot more money than some people listening to this have. Okay, so pull your head out of your ass and start treating it with some respect, because you need to treat money with respect. Take this shit serious. $10,000, even though it's way less than what you had, is a lot more money than 1,000. Don't think that 10,000 can't be swiped from you too. So like, get your head out of your ass and start treating this with some serious respect. Like that, you know, and one of the things that annoyed the hell out of me during the whole 2020, 2021 era was newer traders finding this like initial success and not thinking that trading is a serious business and that it's just fun and games and is easy. Like, dude, that is like a slap in the face to anybody that does treat this as a career and a profession, right? This is a business and you got to treat it like one. And I don't, like, honestly guys, like, I say this because I care. Like, I know that might have sounded harsh, but dude, KH knows, like, I've reached out to him, I tried to help. Like, I care. So don't sit and tell me that 10K is rock bottom, because you could lose that and then you have nothing, all right? And you still have air in your lungs. You still have your beautiful children. Like, find some gratitude. Start to treat it serious, and let's turn it around, right? First step is stop the bleeding. You have to stop the bleeding. And then we can work on building a strategy and a system that allows you to not be right all the time. It's not about 100% win rates and shit. It's about finding that sweet spot where you can operate, you know, whether that's a 40, 50, 60% win rate, but you got good risk reward, and you're fine with being wrong. You stop out, you take your losses, you take your wins, and at the end of the week, you're profitable. That's how you guys got to learn to trade. I love you guys. Listen, make sure you focus on gratitude this weekend. Gratitude for people that put their lives on the line so that we can do what we do. Happy Memorial Day to everybody. I know there's a lot of military veterans and active duty and military families, spouses that are involved in the trading community as well. My wife is an active duty Marine, and you know, they do what they do every day so that we can have a stock market to even trade. So I love you guys. See you Tuesday at the market. Enjoy the rest of your 3-day weekend. Hug your loved ones. Stay safe. Peace.